Tips that help you get intimate with your finances. Learn the mantras that help setting the odd numbers straight and to fortify a long-lasting relationship with them. CNBC TV 18 presents Romancing the Balance Sheet by Anil Lamba. Book your copy today and strengthen your compatibility with your finances.
This is Network 18. And you are watching CNBC TV 18.
Presented by HSBC, the world's local bank.
Sometimes simple thinking, simple strategies work better and yield rich dividends, that too eternally. Take for instance the story of Karsanbhai Patel. He was no B school graduate, but his common sense told him there was a compelling need to launch a detergent that was high on quality but low on price. Thus was born Nirma detergent powder, which revolutionized the detergent market by creating an entirely new segment, the economy segment for detergent powder. The detergent market those days was dominated by Surf manufactured by Hindustan Unilever, then HLL. The difference was stark. Surf was priced at rupees 13 per kg while Nirma was rupees 3 per kg. Very soon Nirma became a market leader. Karsanbhai Patel created a new segment and changed the rule of the game. Everybody followed him. Another interesting story that comes to my mind of a company creating a new segment to break the stranglehold of the leader is that of Hindustan Unilever. In the late 80s, Colgate was the dominant leader in the toothpaste market, with Lever's Close-Up brand having a minuscule market share. Then Lever's path-breaking strategy of launching Close-Up gel changed the whole ball game for the toothpaste industry. Hindustan Unilever's market share rose significantly. Both Nirma and Close-Up are classic stories of how to beat competition by creating a new segment or intelligent positioning. The story of this week's episode is in a way similar. When Atul Churiwal took over the reins of Krishi Rasayan export some 2 decades ago, its growth rate was stagnant. Atul did the Karsanbhai. He went on to create a new segment in the agri-pesticide sector, and this was lapped by the quality conscious yet price sensitive farmers. Take a look at Krishi Rasayan's story. It will tell you what they don't teach you at Harvard.
It started as a small operation way back in 1966 to produce agri-pesticide formulations to cater to the immediate needs of farmers in Orissa. And the promoter Atul Churiwal of Krishi Rasayan was quite happy those days, as he could sell whatever he produced at his Ranital plant. As the cash flow improved, he roped in L.R. Agarwal as a partner to grow his business in the neighboring state of Bihar under a new company, Krishi Rasayan Bihar, which was soon renamed Krishi Rasayan Exports. Thus, in 1973, the duo set up a 3,000-ton plant at Muzaffarpur to produce agri-pesticides dusting powder formulations under Krishi Rasayan Exports. But as luck would have it, these two plants did not see business grow exponentially as the promoters expected. In fact, it was growing at a snail's pace. The company's growth had hit the pause button. Between 1973 and 1985, the company's turnover was stagnant at 3 crore rupees. Like most companies, this one too would have gone belly up but for the timely entry of Atul Churiwal, the youngest son of Atul Churiwal, in 1985. This 22-year-old boy, who had just majored in commerce, was full of vim and vigor. Immediately after taking over the reins, he brought in fresh thoughts and strategies and rejigged operations. His dynamic approach kind of lifted the mood in the office and plant. This was the first turning point for the company. What Atul soon realized was that one of the fundamental reasons for the state of affairs was that PSU banks were not forthcoming in support of local entrepreneurs. The company moved away from dependence on PSU banks.
Yeah, earlier we were solely dependent on one banker, which was not forthcoming with the required funds as planned by us and as required by us. So we approached those private sector banks, and which were more forthcoming and very quick in their sanctions and all that. So we could get timely funds, we could get timely import the material and timely service the market.
With funds in place, things started looking up. The other major problem for the company's insipid growth rate was its location. The company was concentrating only in Bihar for its business. It soon chalked up ambitious growth plans to move to other states. It was sheer coincidence that the state governments of the northern states started wooing the industries across the country by providing attractive tax SOPs of 5-year sales and income tax holidays. The company saw it opportune to spread its wings. Thus, in 1995, Krishi Rasayan Exports set up its second plant in Baddi, Himachal Pradesh, and followed it with another plant in 2001, thus taking the total liquid capacity to 15 lakh litres per year of pesticide formulations, 5,000 kg of dusting powder and 5,000 kg of granules. These expansions and moving out of Bihar state proved to be an instant success. 1 year after the setting up of the Himachal plant, turnover jumped from 3.3 crore rupees in 1995-1996 to 9.8 crore rupees in 1996-1997. That sowed the seed of Krishi Rasayan's growth story, and it never looked back. Moving outside Bihar also meant the need to now establish a large sales network across the country. Building a brand image became the key. Rajesh Agarwal, son of founder-promoter L.R. Agarwal, who joined the company in 1995, tells us how they went about doing this.
Majorly, it's the one-to-one contact. We try to contact all the major farmers, all the leader farmers whom the other farmers follow. Almost every village has got 4 or 5 major farmers with whom the entire village goes. You can say it's like an opinion leader. So we just try to give demos, we try to convince them by our products, by our service. So that helps us in creating a brand in the market. And above all, the customer satisfaction, I can say. The brands what we have built up, it has not been built up in a day or in a year. It's our last 20-25 years of constant effort and follow up with our customers in the market.
Slowly but surely, the company started spreading its tentacles. From a regional player, it started becoming a national player. It built a portfolio of 70 brands, which included the popular ones like Tarzan, Krilaxil, Kritap, Poshak and Prince. Today, the company has 600 sales personnel on its roll, 1,800 distributors and 5,000 dealers with 21 branch offices spread across the country. Interestingly, instead of going the franchisee route, the company appointed its own staff in each and every district of the country, which manages the 3-tier distribution system of distributors, dealers, retailers. Similarly, to hit the bottom of the pyramid, it too, like FMCG players, started selling fertilizers in sachet packets. This strategy made it affordable to small farmers. All these measures helped it make inroads in the sector dominated by giants like Monsanto, Bayer Crop Sciences, Rallis India, Nagarjuna Fertilizers and United Phosphorus. And of course, there was this huge unorganized market too, selling low-quality pesticides at rock-bottom prices. Atul played smart. He decided to position the company between giants like Monsanto and Bayer, who were selling quality products at relatively high price, and unorganized sector selling cheap products. This strategy of tapping the mid-band won the company the hearts of the quality yet price-conscious farmers. This was made possible with a unique strategy. The company went in for imports of high-quality raw materials from China, which allowed it to sell new and unconventional molecules of pesticides at a price lower than the multinationals and at a quality better than the unorganized sector. This pricing strategy got them customers across the country.
We have a relationship with Krishi which goes as back as 1992, and we were amongst the first to register Chinese products in India way back. We have successfully registered quite a few products jointly together in India as well as a few abroad. We have seen Krishi grow, we have seen the Indian market grow, and I would say Atul is a pioneer in the sense that he realized the importance of China and its manufacturing capabilities and also the quality issue which used to be there way back in 90s. And that time we invested so much in the registrations here at a time when most of the Indian companies were focusing mostly on their own domestic production.
With a national presence, the management deemed it wise to set up its fourth plant in Jammu. With a capacity of 1 crore litres for liquid formulations, 20,000 tons of powder and 10,000 tons of granules. The company has also opened international trading offices at Hong Kong and China to boost up its exports. Currently, exports form a meager 2 to 3% of turnover. With the company firing on all cylinders, the turnover zoomed to touch the 100 crore rupee mark in 2006-2007. The next 2 years, turnover grew at a CAGR of 70%, touching 306 crore rupees in 2008-2009. On this large base, the company grew at 18% in 2009-2010, touching a turnover of 360 crore rupees. It targets to touch a turnover of 500 crore rupees in 2010-2011, having achieved 295 crores turnover in the first half. Operating profits grew from 2 crore rupees in 1996-1997 to 45 crore rupees in 2009-2010. From a languishing 3 crore rupee company in 1995 to becoming a fast-growing 360 crore rupees company in 15 years is an amazing success story. Time for a short commercial break. When we come back, we get up close and personal with Atul Churiwal, who breathed magic into this company. Also joining us on the show is Puneet Chadha of HSBC.
Every quarter, India inks biggest